Hi you guys, welcome back to the channel. My name is Brad. This is the Firefighter's Financial Toolbox. If you're new here and this is the first time to the channel, we talk about finances, investing, retirement, these sorts of things. If that's something that interests you, hang around, hit that like button for the YouTube algorithm. We're going to talk about two of the most popular ETFs out there for investors. And they're both from Vanguard, which we all know is a low-cost leader, and they are ones that people know. The first one we're going to talk about is VOO. That's the Vanguard S&P 500 ETF. And we're going to also look at VTI, which is the Vanguard Total Stock Market Index ETF. We're going to look at the differences, we're going to compare them, we're going to see how they've performed, and we're going to try to decide which one is the best choice for you. First we look at is VOO. So, first thing we notice is the low expense ratio on Vanguard funds, and both of these funds have the exact same expense ratio, 0.03%. What that means, you guys, is for every $10,000 that you invest, you're going to pay $3 a year. So very, very low cost to control. If we take a look at the average returns of VOO, last year we had a return of about 18.35%. The 3 years about 14.14%. And the 5 year is just a hair over 15%. 10 year about 13.85%. So you guys, this has really been on a roll. Now, we all know that we have been on a over a decade of a bull market. So keep that in mind. All right, so let's take a look at first of all, the number of stocks in VOO. There's actually 509 stocks currently, but it always keeps the 500. First thing to remember about VOO is it is the S&P 500 index. So these are the 500 largest publicly traded companies in America. These are all large companies, you guys. It has about $630 billion in net assets, and it's all U.S. holdings. So let's take a look at the sector breakdowns. The biggest one at over almost 28%, you guys, is information technology. Tech stocks, no big surprise there, right? Followed by healthcare at 13.8, consumer discretionary at 12.9, and the third biggest is going to communications at about 10.7. The 10 largest holdings. Now you guys, the 10 largest holdings actually make up 29% of this. Number one, Apple, Microsoft, Amazon, Alphabet, that's Google if you didn't know that. Facebook, Tesla, Berkshire Hathaway, Johnson & Johnson, JP Chase, and number 10 is Visa. These are all companies we all know, right? These are big companies. So now let's take a look at VTI. VTI, this is a Vanguard Total Stock Market ETF. Again, same low expense ratio of 0.03%. If we take a look at this one, for the 1 year, we're at 20.95. The 3 year, about 14.5. 5 year, 15.43. And the 10 year is, again, 13.78. So you guys, pretty similar to what we saw with the VOO. This time, though, the number of stocks is 3,640 currently. Now, why is that, you guys? Because in this, you have all of the S&P 500, you have all the large companies, you also have mid-cap companies and some small companies in there. So, with having smaller companies, remember, smaller companies tend to be more volatile. So this fund's going to have a little more up and down, a little more volatility, right? But let's take a look at the top 10 holdings in this one. Apple, Microsoft, Amazon, Alphabet or Google, Facebook, Tesla, Johnson & Johnson, Berkshire Hathaway, JP Chase, and Visa. Exactly the same top 10. Now in this one, the top 10 only makes up about 23.6%. So it's a little bit less of a percentage of the total market. Again, the biggest sector is technology at 26.6%. Followed by consumer discretionary, so a little bit different there, 16.7%. And then healthcare at 14%, followed by industrials at 13.3%. So there is a little bit of difference in how they make up their portfolio. But let's take a look at how the two have performed over history. Now we're looking at a 10-year return here, you guys. So this is assuming an initial balance of $10,000 where we leave it alone and we've just reinvested the dividends. You see that at the end, VOO is about 33,798. VTI is about 32,826. So VOO has beaten this one in the last 10 years. The best year for VOO was about 32.39, but the best year for VTI was higher at 33.45. And we also see that the worst year for VOO was only negative 4.5, where VTI had a year where they were negative 5.21. So remember, whenever you have more volatility, you're going to have more ups and downs, so there's more pain. But we see that we finished off pretty closely. So, which one is the better choice? Well, that depends on you. If you're somebody who believes only in investing in large companies, then I think VOO is your better choice because you're getting the S&P 500. You have more larger companies that tend to be more stable. If you're someone who wants to have the total United States stock market, VTI is your choice. There's a reason so many people use VTSAX, which is the index fund equivalent of VTI. It's because you get the whole market. Now, as you know, this past year, small cap stocks have done very, very well. Are they going to do well in the future? Who knows? Sometimes they do good, sometimes they do bad. There were several years where they were lagging the S&P 500. This year happened to be one where they did better. I don't know what's going to happen in the future. You have to make that decision for yourself. They both have the identical expense ratio at 0.03%. One just has about 7 times as many stocks. So VTI obviously is more diversified across the full stock market. Full disclosure, you guys, I hold both of these funds. I actually hold it as VTSAX in my Roth, and my wife holds it in her Roth as well. My wife also has VFIAX, which is the Vanguard index fund equivalent of VOO, in her 401k. We have this because we have multiple accounts, you guys. If you're looking to fund a Roth IRA, for example, or this is the only fund you're using, you guys don't use both of them because you're copying it. Pick one or the other and roll with it. If you have, for example, the S&P 500 in your workplace plan, which a lot of them do because they're low cost, use that, and then maybe use VTI in your Roth so that you can get the small and mid caps. Or if you're not interested in that, just go all in S&P 500. You're putting your faith in the largest companies in America, and that's a good bet. Doesn't mean we're not going to have bad years. Those always happen, right? But over the long period, the S&P 500 averages 8 to 10%. If you keep reinvesting that money, you guys, you're gonna win the race. I hope this helped you out. If you have a question or you want a little more in-depth, you guys put it in the comments to me. I try to answer all the comments that I can. I'm not a professional. I don't play one on YouTube. I'm just a guy who has a passion for investing and likes to help people out if they don't know the answer. I don't have all the answers. I don't pretend to have all the answers. But I do make a hobby of trying to learn more about this each and every day, and I try to push it onto you in this channel. Hope you got something out of this. If you did, do me a favor. Please drop me that like. It really helps the algorithm. Gets the video out to a lot more people that we can help. If you're not already subscribed, do me a favor. Hit that red button. Subscribe to the channel. Ring the bell. You get notified every time I make a video. I try to make at least one a week. All right. We'll see you. Thanks a lot.